Rob, and morning, Taher. Taher, I'll come to you. Seemingly, India, and this is my perception, I must say, I wonder what you think about it. India being used as a bargaining chip in this entire conversation with Russia, between the US and Russia. And amidst all of that, over the weekend, you have this big move to bolster the domestic economy. And in the recent past, Prime Minister Modi talking about buying Indian. So how do you see both of these aspects playing out together, the uncertainty on global trade and the need to bolster domestic?
I think some of these measures are clearly welcome, and they were long awaited as well, in the sense that we were at a stage where we are still at a place where we are not absolutely clear as to what we will end up with regard to tariff negotiations. We've obviously got somewhat raw deal in the initial discussions, and while this can't be taken as a finality, but clearly it is against us, and therefore I think the last time that we spoke, I had alluded to the fact that India needs to exercise some of its domestic levers in order to probably compensate for some of the shortfall that we might probably have on account of the tariffs, especially the 25 plus 25 configuration. Although it now looks that by and large we should end up with a 25 instead of a 50. But even a 25 will probably be hurtful as far as the initial few quarters or the initial sometime is concerned. And to override that, more from the perspective of generally getting into structural reforms, I think it was very important that India does so, and this is a welcome step. The second generation GST reforms are clearly welcome, and probably I think the Prime Minister also alluded to the fact that they want to once again give job creation, employment in the private sector also a new push. And I think both these measures are pretty important and welcome, simply because household incomes have actually struggled, especially on a real income basis for the last some time. So anything that probably broadens the base for consumption will be crucial for India to sustain above average growth.
So Taher, the consensus view, good morning, of course, Neeraj here, and thanks for joining in to both you and Rob. The consensus view as per the sell side seems to be that we could have a gap up, which of course the pre-open is suggesting, and then sustain it, because there is a trifecta of positives here. So the first order impact is on the index, which could gap up and sustain. And second, the consumption boost would probably see a lot of these consumer names stand out for gains, because right now you will have stocking and then you will have actual demand post the GST cut. Is that how you would approach putting in money to work today or over the course of the next few days?
I think so. I think it's a good setup at this stage of where we are in the Indian markets. We have to remember that we are coming from a reasonably decent underperformance relative to many global as well as emerging markets over the course of the last 1 year or so. And more importantly, I mean, in addition to whatever has happened over the last few days, I think we have also closed the results season, the corporate earnings season, reasonably fine. I mean, it's not gangbusters, so to speak, but there is an incremental improvement that we are seeing consistently over the last 3-4 quarters. We are ending at a little shade below double-digit earnings for the Nifty 500 as such, but we have progressed from, let's say, 8% to 9, and now 9.7 on an aggregate level. I think there is, as you know, Neeraj, the expectation that given some of the measures which were undertaken by the government earlier in the year with regard to liquidity, interest rates, and so on and so forth, and even public spending, there has been a fair bit of cautious optimism that corporate earnings will probably start getting into double digits by the exit quarter of this fiscal. And I think that looks like being by and large in place, and probably gets a little reaffirmed given the developments which have happened over the last few days. Except, like as I said, we need to see the final tariff structure, but India should assume that we'll probably be at 25%, if not at 50%. And I think at 25%, we clearly need to assert some of our domestic levers, maybe even if it means giving a little bit up on the fiscal profligacy. I think that also will be welcome and probably will be taken positively by the market.